Good afternoon. I will now present during the next few minutes the second topic under the intervention area, attracting private finance for sustainable energy, namely innovative financing schemes for sustainable energy investments. This is a topic, and it's very important to emphasize, I suppose, a topic which has already a longer history under the previous Horizon 2020 program, and therefore it builds on very concrete project and market experiences in this context, or in other words, on very concrete feedback from actual projects and the market itself. What do I intend to do during the next few minutes? I will start with a few words on the objectives of the topic, and in this context on also how it is embedded in the relevant policy context, which DG ENER has already presented before. And I will then dive a little bit more into the scope and the expected impacts of the topics which applicants should take into account when preparing a proposal under LIFE. And last but not least, I will then end also by providing as a kind of food for thought for future proposals, a few examples of relevant projects which have been awarded and implemented under the preceding Horizon 2020 program. As all of us know, in its climate and energy packages, the European Union has defined quite ambitious targets for the reduction of greenhouse gases, for renewable energy and for energy efficiency for the year 2030 as part of the international climate change related efforts. Moreover, the European Green Deal, which was presented by the new Commission, proposed based on the Paris Agreement also to increase the greenhouse gas objectives for 2030 to at least 55% and to reach climate neutrality as a continent by 2050. And this is quite ambitious, of course. It's also important to emphasize in this context that building renovations will play a central role as it also reflected in the renovation wave included in the European Green Deal. In practical terms, this means that quite significant investments there are different studies around, but of at least between 150 to 200 billion euros will be required per year to actually be able to fulfill these targets and these objectives. And in this context, it's also absolutely clear that public funds alone will by far not be enough to cover the investment gap, which can still be observed on the market. And therefore, it's the clear line of the Union and of the Commission to use these public funds in the future more and more to only crowd in and leverage private finance. To summarize it in a sentence, overall, public finance needs to lead the way and private actors should provide the scale. In this context, it's also very clear that the level of sustainable energy and in particular of energy efficiency investments needs to be significantly increased as well. And to enable this, also suitable conditions for an adequate supply of private finance, but also for an enhanced engagement of private actors from the private finance market needs to be created. As a consequence, innovative financing schemes for sustainable energy investments needs to be set up and also rolled out at the regional, but also on the national level or even beyond on the European level. And they should clearly, as you can see on the slide, of course, leverage private finance, but also they should be expandable and replicable at scale to really be able to make a difference on the market. To be actually successful and market relevant, these schemes for sustainable energy investments have also to be adapted, of course, to the specificities of sustainable energy in general, but also in particular to energy efficiency investment profiles. And of course, they should be aligned with the relevant EU sustainable finance policy and legislation, as well as the related EU taxonomy. Not astonishingly, the ultimate aim of the topic is therefore the setup of innovative financing schemes for sustainable energy. And the schemes which are targeted under the topic that we are talking about at the moment, they shall cover a few core elements, which you can also see on the slides. First of all, of course, they have to contribute to an increased and enhanced leveraging of private finance, or in other words, they need to be structured in a way to get private investors on board. They have to have a clear focus on energy efficiency, and they should become operational during the project duration. This means, in other words, under this topic, we are not interested in any theoretical exercises which at the project end are just ending up on the shelf, but proposals submitted under this topic shall really make a tangible difference on the market. Now, based on this main focus of the topic, I would now like to zoom in a little bit more, and I would say with a more granular view, a number of elements needs to be or can be summarized, which need to be addressed by successful proposals. As I've already said, the general aim of the topic is the setup of innovative operational financing schemes for sustainable energy investments. But in doing so, proposals can also draw on or upscale other effective financing schemes for sustainable energy. Among those, for instance, also such developed under various PDA project development facilities, like, for instance, our Horizon 2020 PDA facility, or also the ELENA facility of the European Investment Bank. In any case, proposals should address the provision of finance as well as the structuring of demand, in particular also at the regional and the national level. Important is also to emphasize that the proposed schemes need to be complementary, or in other words, additional to already available funding solutions. Or in other words, we are not really interested in reinventing the wheel, but we want to use the topic also to use taxpayers' money in the most efficient way. In addition is, and that's very important to keep in mind, in addition, it's very important and key that proposals are really specific and concrete. This means they should, for instance, target specific regions and sectors. You could think about the building sector, you could think about energy intensive industries or the insurance sector, just to name a few. And additionally, the proposals should also be clearly tailored to and innovative for these targeted regions and market segments. This means proposals do not necessarily need to be innovative per se or in absolute terms, but they should be innovative in relation to the targeted regions or the targeted segments. Additionally, proposals should also demonstrate a real market potential, as well as a clear business case and financial viability. And this also means that in this context, an analysis should be provided, which includes, for instance, the investment sizes targeted, the transaction and management costs involved in the buildup of a scheme, the expected energy and cost savings, as well as the related expected returns, etc. This means I've mentioned a few times, and I will come back to that a few times again during the presentation because it's really essential. Proposals shall really be able to make a real difference on the market, and therefore they should be able to show that they are really responding to actual market needs and actual market demand. And last but not least, of course, it's also key that proposals are really aligned with the relevant EU sustainable finance policy and legislation and the related EU taxonomy, or that they even go beyond these instruments and mechanisms. In practice, a very wide, I would say, variety of financing schemes and financing models can be targeted in a proposal, and the proposal in this context can also involve diverse ownership structures and organization types. The topic mentions a few indicative examples in this context, which you can also see on the slide, but these examples, and that's very important to emphasize, are in any case only meant as a kind of food for thought, and they are in no way exhaustive. But such examples could be, for instance, models which really apply different financing instruments in a tailored way, like tailored grants, equity, debt, mezzanine financing, various forms of refinancing mechanisms, guarantees, or also other refinancing and de-risking instruments. Addressed could also be specific financing models for the energy retrofit of buildings in line with the renovation wave, which address the property or the rental markets, and in particular also deep energy renovation. You could think about, and that's also mentioned specifically in the topic, specific and specialized securitization vehicles and green bond schemes. On the other side of the spectrum, possible are also local investment schemes, including citizen financing, for instance, also crowdfunding, or also other forms, focusing, for instance, on the role of prosumers or applying complementary local, let's call it, currencies at community level to really reinforce short circuits or local supply chains, including smart contracts. Possible are also tailored financing solutions which are integrating existing market-based instruments which are relevant for energy efficiency. In this context, you could think about tradable certificate schemes, carbon finance instruments, including those under the EU emissions trading scheme. You could think about integrating CO2 or energy taxes, or also various forms of energy service contracts or energy performance contracts. And last but not least, what the topic also mentions is very relevant, are dedicated schemes based on aggregators or clearing houses at the regional or national level, which actually facilitate the blending of different public and financing funding sources, which could facilitate the actual matching of demand and supply of energy efficiency finance, or which could facilitate the actual project development. As mentioned, the topic clearly intends to make a difference on the market. I mentioned it a few times, and therefore also, of course, a number of impacts are expected and should therefore also be demonstrated in a proposal. Whenever this is possible, that should be done on the basis and in the form of quantified indicators and targets. Expected is, of course, not astonishingly, under these topics, the delivery of adequately tailored innovative financing schemes that are becoming operational and ready to finance sustainable energy and in particular energy efficiency investments in practice on the ground. In this context, also concrete investments in sustainable energy shall be triggered during the project duration, together with related primary energy savings, renewable energy generation, as well as greenhouse gas emission reductions. And last but not least, overall funded projects should also contribute to the really widespread implementation of the relevant EU sustainable finance policy and legislation, and here in particular, as I've mentioned, the relevant EU taxonomy, and in addition, of course, they shall contribute to the achievement of the underlying objectives under these policies and legislations. As I've already mentioned, a number of projects have already been funded under the previous Horizon 2020 program to establish exactly such innovative financing schemes for sustainable energy investments, which could be very relevant as references also for future live proposals. And I will now just give you a few hints on such projects which might be relevant also for future live proposals. First of all, the project Trustee. Trustee has set up a forfeiting solution which focuses on industrial SMEs and buys receivables from commissioned sustainable energy projects. In this context, it has also designed and uses a standardized and standardizing project assessment and development platform, which is also the basis for an attached securitization vehicle, which intends to issue green asset-backed securities, or in other words, green bonds. In this way, Trustee enables third-party financing and in particular also the attraction of institutional investors, among those also pension funds. Another relevant project is called EFIX. EFIX focuses on the one hand on capacity building and on the other hand also of the rollout of operational innovative financing schemes in Eastern Europe and the Caucasus region. And the mechanism that it intends to roll out include, for instance, energy performance contracting, crowdfunding, and leasing. ESI Europe is a project which originates originally in South America and Central America, and also has some roots in other Asian countries. And this project replicates an energy savings insurance mechanism for SMEs in Europe, which integrates simplified independent validation and verification, and is also based on standardized contractual arrangements. The initial target countries of the project were Italy, Poland, and Spain, but the regional coverage is now also extended by a follow-up project also to Croatia, Greece, and Slovakia. The second project on the slide has a very difficult acronym. It's called EIAS, but apart from the difficult acronym, it's a quite interesting project and a very innovative one, as it intends and aims to develop and deploy a new business model and a new financing structure also for industrial SMEs, which is based on an energy efficient equipment as a service approach. In this context, the project has two main components. First of all, it addresses the mainstreaming of energy efficiency servitization, or in other words, a pay-per-use financial model for SMEs. And secondly, on the other hand, it addresses the standardization of the attached financing structure, and here in particular of the structure to recapitalize technology providers based on a sale and leaseback structure. Eurobase is a project which is also a replication project. It comes originally from the US and it replicates an on-tax financing mechanism for home renovation in Europe, which links the debt to the property rather than to the owner, and it collects the debt repayment through property taxes. In this context, it has set up and is still in the process of doing so, pilot one-stop shop and aims at a later stage at widespread replication in Spain and beyond. Renobil, if I come to the second project on the slide, introduces an on-bill financing scheme which draws on the utility bills as repayment vehicle to actually also finance and scale up energy retrofit investments in residential buildings, and it pilots the scheme in 3 countries, in Italy, Lithuania, and Spain. And last but not least, before closing, a few words about projects which have been awarded under the last energy efficiency call of the previous Horizon 2020 funding program. So this means these projects are still at a rather early stage of development, but can be still very interesting also as a reference for future live proposals. SAFER, for instance, will set up a private equity fund providing equity and mezzanine financing for industrial sustainable energy investments in Central and Eastern Europe. And in this context, the fund is also supported by a dedicated software platform which facilitates the actual project aggregation and pipeline creation. Another interesting project is called SER or SER. SER targets energy retrofits also in buildings, but in this case, energy retrofits in the non-profit sector in Italy and beyond. And it does so by setting up a forfeiting solution for private ESCOs, which is then also combined with credit guarantees as well as standardization and aggregation elements. And last but not least, Super E will set up an innovative PPP solution for energy efficiency to also support the energy renovation of social housing building stocks, including at the same time also the development of dedicated credit lines, risk-sharing facilities and energy performance contracts, and addressing at the same time energy poverty issues. Moreover, and just to give you a last hint on interesting projects that you could look on when preparing proposals, moreover, also a number of funded PDA or project development assistance projects have been developed in the past, and they have developed in particular financing solutions that could be very well worth replicating in other contexts or also in other locations. Now, before really closing, I would like to summarize also a few issues based on the experiences we have made with very concrete Horizon 2020 proposal submissions in the past, which are also, I think, very worth looking at and keeping in mind when preparing proposals under LIFE. Overall, and I really would like to emphasize that it's absolutely essential that proposals include a sufficiently clear, concrete, and mature concept. This means they should, for instance, be very clear already at the proposal stage on the financial solutions to be developed, as well as, for instance, also on the sectors and investment types targeted. This means it is generally not sufficient to just describe a general problem for which a solution, however it will actually then look like, should be found and developed during the project solution and project duration. Proposals, again, I mentioned a few times, but one more time here, proposals should also demonstrate that they actually respond to real market needs and therefore can also be expected to have a corresponding concrete impact on the market. To be able to do so, they should also contain an adequate, at least preliminary market and barrier analysis. In this context, also the economic and financial viability of the solutions envisaged should be shown and should be also clearly traceable in a proposal. And last but not least, it's also absolutely key, it's absolutely important that the actual market acceptance is addressed in a suitable way. This means it should be clarified already at the proposal stage whether key stakeholders, and here in particular also financial sector actors, are already involved in the proposal and in the proposal or at the proposal stage, or with which concrete engagement strategy this shall be achieved effectively. I will close at this stage, but not without mentioning different channels to keep in touch and also to get updated on LIFE, and in particular also on our clean energy transition sub-program. Thank you very much for your attention, and thank you very much for your interest in the topic. Thank you very much.
Hello, my name is Bjoern, and I'm a senior project expert at CINEA, and I'm going to present a bit more details about the topic on mainstreaming in the Life 21 Clean Energy Transition Call. So the full topic name is Mainstreaming Sustainable Energy Finance and Integrating Energy Performance in EU Sustainable Finance Criteria and Standards. And so the objectives of this topic, you'll see that it's really, we're trying to address two linked but separate issues. One of the main objectives, which we've been pursuing in the past for many years under the Horizon 2020 call, is that we're trying to make sustainable energy investments just as attractive to private investors as a car loan. And so what we're trying to do is to reduce the perceived complexity of energy efficiency and small-scale renewable energy investments, so that investors will attribute them a risk profile that is less overestimated. Currently, the market is overestimating the risk associated to these investments because of the lack of track record. And so our assessment in this is that there's a need for concrete tools that would allow investors to be assessed, to assess those investments just like any other types of investment. And another important point is the fact that we should increasingly integrate non-energy benefits in the financial assessment of sustainable energy investments. And when we talk about non-energy benefits, there's ample literature available about this, but we're talking about increasing comfort, productivity, health, value of the buildings, and the like. The other main objective that we're trying to address with this topic is really to align sustainable energy investments with the EU sustainable finance policy, which, as you know, has had a major progress in the past 2-3 years. So here the idea is really we want to make sure that the drive towards sustainable finance on the capital markets is fully benefiting energy efficiency and small-scale renewables, because there's a number of factors that might hinder that. And so really the aim of the topic is to anchor these sustainable energy investments in the sustainable finance landscape. So just a few, a point of definition that's important to have in mind here. When we talk about sustainable energy, it's not just renewable energy, but it's really the combination of energy efficiency and or renewables and small-scale renewables in particular. And with really a focus on energy efficiency. Offshore wind farms have no specific issue now accessing finance. It's not the same if you're looking at a small biogas plant, for example, and this is the kind of things that we want to address. One of the main objectives also of this topic is to really try to connect retail investments in sustainable energy to the capital market. And so really looking at the whole value chain, from the retail banking through bond issuance and to pension funds and insurers and asset owners, really trying to link all of that into the finance sector and ultimately to the capital markets. You'll see several references to the Energy Efficiency Financial Institutions Group. This is a group that was established by the European Commission and the United Nations Environmental Programme back in 2015. There's a lot of information available on the website of the IFIG. I would really encourage you to have a look at what is going on, because a lot of what we're trying to address is really linked to the recommendations stemming out of this group. Now, we've got two scopes in this topic, and so basically, your proposal can address either one or the other or both. It's really up to you. There's no specific requirement to address both. So I'll start with the first scope, which we've called Scope A. That's addressing mainstreaming and de-risking for sustainable energy investment. And here we're looking into, so we will be looking for activities that support the securitization of sustainable energy assets. I explained that just a moment ago, really looking in all different types of sectors, types of assets also, whether they are property, whether they are energy efficiency services, receivables. So it's really up to you to target the right market. We're also looking for proposals that will support the integration of long-termism and basically how we can integrate sustainability risks into the decision-making tools of private investors. So, I mean, for example, the internal risk models, but it could also be rating agencies. This is really up to you to find which are the right ways to address the market. An important aspect that we'd like to tackle also with this topic is basically exploring the impact of energy efficiency, in particular on financial regulations, when you're looking at the prudential framework. So capital ratio requirements, for example, for the banking sector, but also for the insurance sector. There's a lot of work already ongoing, but we think there's a need to basically deepen that work, produce more studies that would allow a discussion between market actors and the supervisory authorities. We're also looking for proposals that would lead to basically harmonization of, aggregation and de-risking private investments. Basically, here, when we talk about mainstreaming, is really the idea of making these investments just plain vanilla as the market wants them to be. There are different approaches already being developed here and there. We think that further harmonization would really help. And another point is also how to incorporate energy-related preferences when it comes to consumers. So when we're talking to access to financial markets, retail investors, how can we better ensure that their wishes include sustainable energy and not just sustainable development in general? And then there's also a lot of things that could be developed around digital solutions and data that would include basically developing algorithms, for example, to facilitate energy performance-based financing schemes. That is increasingly developed in the US, for example. But so we think there's room for proposals that would tackle this aspect. Data is clearly an important feature of this topic. So for the activities that focus on data, that could be, data collected through energy performance certificates, data collected through smart meters, data collected through energy audits, you name it, basically. And it's up to you to find which type of data you want to address. In general, we'd like to ensure as much as possible that they are connected with the DEEP platform that was set up by the EFIG. The DEEP platform basically collects large-scale data, and it's an ongoing work for several years now to collect large-scale data on the performance of energy efficiency investments in buildings and industry mainly. And so whatever you come up with, we've got, ideas that, activities could include, the collection of high quality data, with the idea that data is missing for investors' risk models. And so refining data would allow them to better evaluate investments in energy efficiency. Quality of data is a major issue when we're talking about especially energy efficiency. It's a major issue. So interoperability of data, which could come through standardization of measurements of measurement units, is definitely something that you might want to address. And then data collection and reporting for project developers is also an aspect. We're not just talking about here the financial sector investors in a bubble, but it's also in relation with project developers who are the ones issuing the data ultimately. And data governance framework could also be addressed. Scope B is looking into alignment with the sustainable finance framework or achievement of this framework in the fields of sustainable energy investments. And here what proposals could address is, for example, the development and support to implement labeling and certification schemes. And so basically, those set out in the sustainable finance legislation or others. It's also helping private investors or companies to comply or overachieve on the sustainable finance requirements. So that could be supporting project developers to respond to private investors' needs and practices. So, how you set up technically and legally your project has a major impact. And then here we're talking again about standardization. It could also be about when we're looking at the market for sustainability assessment tools, basically, making sure that sustainable energy related metrics are really integrated into that market, which is flourishing and which has many different standards. So how to make sure that sustainable energy is integrated equally among all market standards and maybe going towards convergence is something that could be addressed. And then again, regulatory bodies, supervisory authorities are very active in the field of sustainable energy or sustainable finance. So basically supporting their work by bringing in specific expertise on sustainable energy into sustainable finance is something that proposals could address. Last point here. Basically supporting investors better analyze the sustainable energy investment aspects in their portfolios. And basically the idea here is to increase transparency. This was for Scope B. Now, really important things that your proposals should keep in mind if you're going to prepare something for both scopes. We want proposals that really involve private finance stakeholders. That's really, I mean, this is the key target of the topic. They need to be involved. They can be involved at proposal stage with letters of support, but they should also be involved, and you should demonstrate in your proposal how you will involve them throughout the project. So focus on institutional investors, but also focus on the private banking sector. We want proposals that have ideas that have a potential for being taken up by market actors. That's really important. We don't want just great ideas that end up in a shelf or in a hard drive. We want great ideas that are taken up. And also, we want to make sure that there's not too many things being developed. So please have a look at what is ongoing on the market already. I'll talk about that a bit more later. You should really also contribute to what's existing and look at what are the gaps. There are things on the market, there are things that are missing. Have a look at the work, for example, of the EFIG, but also of the Sustainable Finance Platform and so on. One point that's important here is I would like to ensure that the investments that are triggered are aligned basically with the latest technical criteria of the EU taxonomy regulation. And then for data proposals, please demonstrate how you build on existing on the D platform, or how you will complement that, or how you will link to it, or if you're not going to do that, explain why. This is really an important point. In terms of the impact, so you'll see there's a whole list of impact indicators that we indicate here. Please, you don't need to perform on all those impacts. These are some of the impacts that you will be evaluated on. Don't invent things because something is just mentioned here, but know that this is what we will be looking at. And depending on the content of your proposal, clearly we will look at that as a filter to evaluate. And if you're not performing, and if you're not claiming any impact where it should be expected, then you're probably not preparing a good proposal. So the impacts are, I'm not going to go through each of them one by one, but they're really related to the scopes. They are slightly different for scope A and scope B, but you will see that there's a lot of common points between both of them. What makes a good proposal? I think what really makes a good proposal is if you have a good analysis of the market needs and the existing problems, and you can demonstrate that in less than 50 pages. So in a clear and concise manner, you show that you have understood the market needs, and you show that what you're proposing, so the concept you're proposing, is clear, it's concrete, it's mature enough. Of course, in an application form, you can't put all the details of everything you're going to do, and we can't ask you to do that, but still you need to have already a good idea of what you want to develop. And so clearly, if that is relevant, if external evaluators judge that this is relevant, this is really a good starting point. If you miss that, your budget might be perfect. Really, what matters here will be the concept and the relevance. And the other point that's really important is we want market impact. Ultimately, this is what we're looking for. and so really the involvement of market actors, as I explained, and the market acceptance. Of course, proposal cannot deliver market acceptance, but we're looking at the potential for market acceptance. And so this is really the things to keep in mind if you want to have a good proposal. Project examples. Before I go into them, I'd like to say these are just examples of projects we have been funding in the past. That doesn't mean they are the alpha and the omega of what you're working on. There's a lot of things that happen outside of EU-funded project. And so we don't want just to get this list of projects and an application saying we will build on this and this and that. You might pick 3, or you might pick 1, or you might pick some that are completely out of this list. As long as they are relevant and you explain why they are relevant and how you will build on them, this is really what matters. Now, to give you examples of projects, as you can see, several of them are a suite of projects. SEEF, Launch, Propel, for example, 3 projects that have really developed a full set of IT tools to evaluate and benchmark sustainable energy investments, with basically standardization to reduce transaction costs, and also a de-risking approach with the provision of insurance. Looking at the more institutional investors, a series of projects called SEI Metrics, ET Risk, and their latest evolution called Life Pacta, which is funded under the LIFE program already. They're really looking at how you can enable investors to measure the climate alignment of their portfolios with really developed metrics and IT tools. So please look into that. Looking at real estate investors, a very good project we've had in the past is called CREM, the Carbon Risk Real Estate Monitor. And it's basically looking at how you can integrate energy performance in the portfolio management of real estate investors. Looking at the banking side, Energy Efficient Mortgage Initiative, which has had several projects. One latest project just starting now in the Nordic countries called NEEM, Nordic Energy Efficient Mortgages, is really looking at how you can develop new financial products for mortgages that would take into account the energy efficiency of the home. We have a set of projects that are developing risk assessment tools. So Quest, looking at investments in building renovation with a specific integration of quality management and non-energy benefits. AAA is looking rather at the early stage identification, quick due diligence for bankable projects in energy efficiency. Invest is a framework for, again, technical and financial risk valuation, but then looking at commercial buildings. Refine is looking into setting up a forfeiting scheme, basically, so refinancing receivables from energy performance contract or energy efficiency services. They're working across 10 countries. This is really something that you might want to look at for the specific ESCO sector. And then Level EI is a project that is currently looking at how to develop green financial products that would address specifically energy efficiency and renewables, and also checking the compliance of existing green products, which is a very interesting activity. So this is a bit of an overview of the stuff that we've been funding in the past. It doesn't mean that your project should do the same. But if you want to see what a good project looks like, you can have a look at what these projects are doing. I think I'll stop here. Please have a look also at the FAQs that we'll be publishing on the topic page. And if there are any updates later on, you will get them as soon as you're registered to prepare a proposal. I'm going to stop here, and I would like to thank you in advance for your attention and for preparing excellent proposals, which we will be very happy to evaluate and hopefully to fund in the future. Thanks a lot. Goodbye.